Hello, welcome to the Forex and crypto trading. Now, hopefully it's obvious what we're going to go through today. We'll look at some Forex opportunities and some crypto opportunities. Now, first, let me just put the disclaimers. I can get that up. There we go. Disclaimers are there on the top left-hand corner. Please read them because it will help you to understand what you can expect to get from these kind of videos and what you shouldn't expect to get from these videos. Essentially, we are giving you a demonstration as to how we use our apps, how we apply our methodology, different platforms that we use. Just because we do that does not necessarily mean that that's the best thing for you. Watch, learn, practice, but ultimately it's your choice what you do, essentially, is what the disclaimers are saying. Now, different places you can go if you want some extra help or resources. So you've got my email address, which you should be able to see there, which is becky@tradewithufos.com. You also have tradewithufos.com/Becky, which is showing there on the screen. And let me show you what that looks like. So if you go here to tradewithufos.com/Becky, you can do things like book one-on-one coaching with me if you'd like to. You can book into or enroll into or subscribe into our sort of general coaching, so you can attend different events live, different sessions live. You can check out the courses that we offer, the apps that we have as well. Check out our live trading schedule and different logins as well, depending on what you have. Now, if you scroll down, this is something we're going to use a lot today, and we'll look at Forex since we're looking at Forex ourselves. This is where we log the trades, or in this case, because you're on the Becky link, this is where I log the trades from the sessions that we do live. So for example, today we place new trades, I'll place them in here. So from here, you can then track and see what happened. It was cancelled. Why was it cancelled? You can come to the end in the notes section and you can read up on what happened there. Why was it cancelled? Was it the EMA? Was it the auto climate that changed? Did we have losses? If it says small loss, why is it small rather than full? If it's break even, what happened there? If it's a small profit or a profit, what happened there? And you've got snapshots as well that you can look into to see what it looked like and hopefully make the notes make a bit more sense. So this is a place that I would suggest that you come to learn and follow with the trades that we place in these sessions. Now, if you scroll down a bit further, you'll see that there are areas here where you can learn more about the apps that we have on different platforms. You can check out Top, which is our Predictive Options Planner, nicely known as Top, which is our platform that you can check out. And there's a question and answer section here as well. So with this, you've got loads of different resources, loads of different help available, some of which is paid for, some of which is free. You can always email us for free as well. You can post a question here for free. We will help you as much as we can at whatever level you are at. Okay, so that being said, let's have a look at some Forex opportunities. Now, because we have the live session notes that we now update, we don't spend time reviewing those old trades anymore. Now, we can do those maybe in sharpening sessions where we have a bit more time, where we're not placing live trades to give visual context and verbal explanation. Otherwise, there's no need to because you can follow these anyway. You can see what happened here anyway. So we are going to go straight into looking for opportunities. Now, first things first, we've come to the FX Street economic calendar. I'm going to filter here by, we'll keep those main countries. I'm going to filter by high impact news, apply that. And I'm going to look at for the next week or so. So from today until next week. Now, what I'm doing is I want to know which of the markets that we could be trading have high impact news coming out, meaning which of the markets that we could be trading are likely to see volatility. Volatility increases risk, can increase reward as well. If it moves price quickly, then that can move to our target quicker, which is great. Can even maybe gap past our target and we make more money. Can also mean that it stops us out quicker. We experience more slippage, maybe it gaps past our stop and then we lose a little bit more. So that's why as traders, we want to know this. Those of you that are more risk averse might say, for example, tomorrow, a whole bunch of news coming out that could affect the British pound. So tomorrow, maybe I don't trade the British pound at all, or I don't hold any trades from today over into tomorrow for the British pound. Some of you might be quite risk the opposite of risk averse, so maybe risk comfortable, where you might say, it's fine, I'm just going to put a little bit of a wider stop on those. I'll still trade them. Some of you might be somewhere in the middle and you'll say, I will trade the pound if I see a very good opportunity, but I'm going to use less risk than I usually would. So maybe instead of risking $50 on that trade, I'm going to risk $25 on that trade, for example, and I'm not going to place any more than £1 trade. So again, it's for us to decide as traders what works best for us. But considering we can see that we've got the pound and the Aussie over the next couple of days, we've got non-farm payrolls at 8:30. This is Eastern time on Friday. That can often affect the US dollar. And we've got a couple of Canadian dollar news as well. So between now and the end of the week, few of our sort of major currencies that we'd look at are having lots of news coming out, especially the pound. So what I'll do is I'll try not to double up, meaning if we place a dollar Canadian, then we'll try not to place another US dollar or another Canadian. If we place a pound, then we definitely won't place another pound one. So that's what we'll try and do. But again, up to you to decide how risk averse or not you are, and therefore what you do with this information and how, whether you place trades or you don't, or what you do in between. Okay, so that being said, what we're going to do is we are going to come to, oh, just realized my camera might not be working. I think I've frozen. Let me try and plug in another one and see if that works or not. Let's see. I am going to just try something. Okay, give me a sec, guys. I think this camera might do better and hopefully doesn't flick and turn off. Brilliant. Okay, so let's go and look at some trades. So first things first, we're going to come to TradeStation. TradeStation is not, of course, a platform where you can place trades with Forex. Those of you that might have TradeStation accounts might do what I'm about to do and use it for scanning. The scans that we have on TradeStation are usually better and more complex in a good way than a lot of other platforms. You can go through manually and have a watch list, but for us, using these scans just helps to save a little bit of time, because these scans are showing us, hey, this is probably a good place to look, right? So we'll start with our daily climates and we'll start with the US dollar. And you'll see here at the top, let me freeze this screen, see if that helps. You'll see that at the top, we've got near sensible opportunities. Now, we see that for the New Zealand dollar, the Euro dollar, and the Aussie dollar. Luckily, not the pound in there. So if we do see opportunities on all of them, perhaps we'll take them. Again, you might choose to only take one of a US dollar pair, knowing that the US dollar might see some volatility on Friday, especially with these bigger timeframes. So yellow box tells us it's a near opportunity. It also says sensible. This one says near, but it says hopeful. We don't want to trade hopefully. We never want to trade hopefully. We want to trade sensibly. So we're going to take these top three to go and look at. Now it looks like they're all short opportunities because we've got red boxes here. So we're going to look at them one by one. We're also going to look at them on MetaTrader, which is obviously where most of you guys, or a lot of you guys, would be. Oh, that's interesting. It's not loading the whole screen, which is interesting. Let me see if we can just push this a little bit and make this better. So at least we can see it all, rather than spend time trying to format things differently. Okay, so we can still see that. So obviously a lot of you guys will be trading on MetaTrader if you're trading Forex. And so that's what we're going to be looking at, because it makes more sense. Now with MetaTrader, it's a great platform. We use it with our UFOs, of course. I personally don't find it the best to use in terms of placing orders. So I'm going to come back to TradingView to actually place it, but I'll show you how we can use MetaTrader for those of you that do use it with the apps that we're using and how we apply the methodology. So we'll start with the Aussie dollar. So let's put that on each of those. We had a daily climate in our scan, so we'll use a daily climate here. So daily climate meaning what's going on bigger picture on a daily time frame, right? That's what we're going to look at. If we find that we've got something good going on here on the left, then we'll look at the right to find what might be, and it looks like we do have, just maybe not, to find what might be a good opportunity. So let me just explain that, and I'll explain this one in a little bit more depth, and then from there we'll be much quicker with looking at the opportunities. So for those that might be new to this, hopefully this gives you a bit of context as to what we're doing. So we have this app at the bottom here. It's called Auto Climate. It's an app that essentially shows us where probabilities lie, up, down, or nowhere. We have a thick red dot as our most recent Auto Climate data, telling us probability is down. Thick red dot, probability down, meaning we should look to sell. So we should be aware of the fact that we have buyers close by. That's what these green UFOs are. They are buyers. And in this case, we can see where these buyers are. They start at 0.6854. So about, what's that, about 80-ish pips away. So that might come into play here as to where we're going to choose to get out. Definitely will come into play there. It might mean that we don't place the trades as too close. If we've got probability down and we're looking to sell, the only thing that stops things moving down are buyers. So if we've got buyers close, we might not want to take that trade, but we will see depending on the numbers. Now we've got another element here, which is our EMA, this purple line that we see. Our EMA, as we can see here, tells us, if we look at this number over here, so focus on this number. Don't want to freeze the screen just in case it freezes too long, and that happens sometimes. We can see that the EMA price is 0.6947. 0.6947. That is where we currently have our EMA price. Why is that helpful? Because the EMA price, if price is below the EMA, which it is now, then you're likely to get sellers there. So we know that we're likely to have, we've got context, probability down, and we've got sellers that are likely to come in around the EMA. What else do we have? On the right hand side, we have a red UFO around those prices, showing us, can't quite see the end of those prices, but we've got a red UFO showing us that we have sellers here, and that coincides with that EMA price. So red UFO is sellers, EMA price brings sellers in the context of a downward climate, probability down. Sellers, sellers, and sellers. Therefore, we are likely to take this trade. Now, why did I say likely to? Because there's one more thing we need to bear in mind. It's where these buyers are. So what I'm going to do, I'm going to bring up the sheet. This should be logged in still. Let's have a look. Yeah, it is lovely. So we're going to log it, and I'll show you how we log it bit by bit. So I'm going to pull this to the side here. We'll bring MetaTrader back up over here. Okay. And let's just scoot over here a little bit so I can just write it down. So today is August 3rd, doing that the American rate, which is backwards for me. But here we go. Aussie US dollar, we are doing 1 day on the left and 60-minute on the right. 60-minute on the right. We're going short. The entry price will be 0.6940, which is where those sellers start. And we can't quite see, unfortunately. I wonder if I make this a bit bigger. Oh, there we go. So they finish at 0.69. What we're going to do is round that up to the closest pip, 0.6967. Add a couple of pips for the spread, takes us to 69, and then add 5 pips for a little bit of wiggle room. So that's going to be our entry and stop. Now, therefore, our risk in pips, we'll figure that out. It should be 34 pips, but I'll confirm that in a minute. So 34 pips down from here, 0.6940. That's going to be our first target as well. So that's the risk. Our first target is going to be below that. So our first target will be 0.69. What would that be? 0.6906, which is good because that is before this lot of buyers. So everything's checked. We are now going to go and place that trade. We will use TradingView to do this. I'm just going to put that to the side to give me a little bit of guidance here as I go to TradingView to place the trade, and then we'll go from there. Just checking everything's working. Looks like it is. It's good. Okay, so we'll come back to TradingView. We're looking at the Aussie US dollar forex. I'm going to look at Oanda data here. It doesn't matter, because if you're trading with MetaTrader, then you would probably place this with MetaTrader anyway. So kind of ignore what we see here on TradingView, because if you're not using this data, it's irrelevant. If you're using MetaTrader data, then you would use these numbers that I'm about to show you. So it was a 1. Okay. So I'm just going to draw the general area here. 0.6940 is our entry. 0.6974 is our stop. Brilliant. So place it in here like that. 0.6940. Oh, 0.6. What is that? Not working. 0.6940. Brilliant. Stop loss. Stop loss is 0.6974. That is 34 pips of risk, what we thought. 34 pips of profit then is where we're going to take our first target, which is 0.6906. Brilliant. Okay, we'll do that one in a minute. So per lot, we were going to use just one lot. So that's $3.40 per each half of the trade, actually. So because we're going to do two different, what would be the word? Two different sides to the trade, because we're going to place two targets, but $3.40 would be per lot of risk. Okay, our final target, coming back to MetaTrader, let's make this big again. Final target is going to be 0.68541, round it up, 0.6855, plus a couple of pips for the spread, 0.6857. That's going to be our second target. I'm back to TradingView to place it. So I'm going to risk $50 on each half of the trade. And that is just as an example. You guys don't need to do that. It's just to show you it's a nice $100 overall risk, $50 each. It's easy maths. So like I said, not necessarily something you would do. It depends on what you want to risk, what you are comfortable risking. So that's the first half of the trade. Second half of the trade, exactly the same entry, exactly the same stop loss, exactly the same risk. And then our profit is going to be, or our profit target is going to be what was it? 0.68. Sorry, I'm looking at the wrong thing. 0.6857. 0.6857, which is 2.44 to 1. That would be the risk to reward outcome there if we hit that target. Now, bear in mind, let me just draw it on as well. 0.6857. Bear in mind, just put that on. Great, thank you. If we hit 2.44 to 1 on half of the trade, and then we hit 1 to 1 on the other half of the trade, then really the overall reward to risk is somewhere between those two numbers. So it would be, what would that be, like 1.7 or something like that? I'm not very good at maths, but somewhere in between that, you hit both halves of the trade. Now, why are we putting in two targets? Again, for those that might be newer, to give you a little bit of context here. Because if price goes some way in our favor, but then comes against us, we break even, because we make half the trade, then we lose half the trade. We call it a safety target, keeps us to be safe. If we just had a target down here and that was it, price might get part of the way, not quite hit it, and then we end up losing. So it's to stop us losing more often, basically. Doesn't guarantee that we don't lose, of course not. That's why we have our stop loss in, to be safe. But with our safety target, it's less likely that we lose. Now, obviously we want it to come and hit our second target as well, so we still place that further target based on where we see we have objective room for that market to go. And that's where we use the UFOs to help us with that. So we're still going to place that target, hoping that we get it there. If not, if it goes a little bit in our favor and against us, we break even. So we reduce the chances of a loss, increase the chances of a break even, and the chances of a profit are still the same. It just reduces the overall reward. Okay, so let's come back to TradeStation and have a look at the next one, which is the euro dollar. We'll go back to MetaTrader to do this. So euro dollar. Again, just to be clear, with our trading here, we are trading the US dollar. If we end up placing these trades, we are trading the US dollar 3 times. If we place Aussie dollar short, New Zealand dollar short, euro dollar short, then we are going short on US dollar pairs 3 times, which means we are essentially tripling our risk because we're essentially trading the same thing almost. So not necessarily advisable to do that. Now on this market, we don't actually have opportunity here, I don't think. To take a quick look. 90191. Okay, no, so the EMA price is around here, where that mouse is. So if the EMA price is around here, there are no red UFOs around there, not aligning, not enough sellers in the same place as far as we're concerned, so we don't place that trade. Move on very quickly. Okay. So the last one was the New Zealand US dollar, so let's have a look at this one. Once we've exhausted the US opportunities, or the US dollar opportunities on a daily chart, we will then go through and have a look at cross pairs. Okay, so similar thing here, a couple of things going on with this one. We do have probability down coming from the climate. The EMA price is 0.6261, which is here, right? Just what, 13 pips, 14 pips above current price, around about here. No red UFOs there, not enough sellers at the same place. So not enough probability for us. Also, we have buyers very, very close. So even if we were to get into a trade there, depending on the size of that risk, we might end up with our 1-to-1 falling further than when buyers start, which would be counterintuitive. So we are not going to place anything on this market either. So we have actually in the end only placed one US dollar trade, and that's probably a good thing considering the US dollar and the Aussie dollar actually have news coming out of the next few days that might increase volatility. So we'll leave it at that. We'll come back to TradeStation now, and we will have a look now at our cross pairs. Now Aussie Canadian, bear in mind, obviously, if we place Aussie trades, already place an Aussie dollar trade, we place more Aussie trades, then you are again essentially doubling up on your trades or doubling up on your risk. So be aware of that. We will look at them. Some of you might not have placed this first one, you might want to place other ones. So we'll look at them one by one. So Aussie Canadian first, and we're going to do this all on trading view. Aussie Canadian. And I'm going to use Aug data, but again, you use the data that is relevant to your actual broker that you're using. Okay, so thick red dot, probability down. What we're going to look at here on the right hand side is actually a 55-minute chart. We prefer to use Fibonacci timeframes if we can. We tend to find for us that it helps to increase probabilities a little bit. It's fine if you want to use the hourly, especially if you're using platforms like MetaTrader, where you can't look at a 55-minute chart, right? So it's fine to use the 1 hour. We're going to try and use the 55-minute first, see if we find any opportunities. If not, we'll look at the hourly. So thick red dot, probability down. We have our EMA price at 0.8931, which is just beneath this UFO. Now, I am going to still place this trade, even though the EMA is not quite lined up just yet. And the reason for that is because, let me draw this in now so we can more easily see it. So 3-4 would be the entry, and 642, round it up, 6-5 plus 2, 5. That's going to be the stop loss. Okay, so I've grouped these two UFOs together because they're overlapping. So we don't want to get out of a sell position still amongst sellers. So we still put that stop loss further away. Now, this starts, our entry would be 0.8934. The EMA is currently at 0.8931, so not quite lining up. However, the M in EMA stands for moving. So as price moves, so too does the EMA. It will move with price. Price has got to go up by a good 34 pips in order to reach our entry. If price goes up by 34 pips, is the EMA likely to go up by 3 pips? I think very likely. So it's anticipating this one, but I think that's likely to happen. Now, as we can see, we've got more than 1-to-1 space before we would hit our final target, which is going to be down here. based off of this UFO, this green UFO showing us buyers, 0.88374, round up, add a couple of pips for the spread, and that's going to be our final target. And our safety target will be 1 to 1 away. So let's put this in, 0.8. I don't know why that keeps happening. Nope. I don't know why. 0.893. Okay. And oh, I must be clicking the wrong buttons. It must be me, but here we go. So as we can see, per unit, per lot, then we would be risking, in this case, $2.96. In dollars, obviously, you might be trading in other parts of the world, different currencies. So I'm just going to log this again. In fact, I'll show you. Until like that. So this is Aussie Canadian. It's a 1 day, 55-minute short. Entry is 0.8934. Stop loss is 0.8972. We know that's 38 pips worth of risk, as we can see here. Pips, 38. And our risk per lot, we've got there as well, 2.96. Our safety target is the same as our risk. So if it's 38 pips worth of risk, then it's 38 pips worth of reward. So this is 0.8896 then. And our final target, as we had here, was 0.8840. Okay, so that's now in. The reward to risk, we'll figure that out in a second, and we'll come back to that. Okay, so first half of the trade, again, $50 I'll put of risk each. And we give you what the risk is per lot so that you guys can decide how many lots you want to use, right? You know what the minimum risk would be. I put in 50-50, as in $50, $50, just because it's easy to show as an example. The same entry, same stop loss, same risk. And our take profit is 0.8840, which is 2.47. Let's bring that up. Move it over here. 2.47 worth of reward to risk. So again, overall, if we hit target 1, then target 2, the overall reward to risk of the trade is somewhere in between that. But we've logged the reward to risk of the final target, because that's the one that's going to vary. First target will always be 1 to 1 away. So those are our 2 trades. What I have realized is that I haven't placed a note yet, which makes it so much easier to track things. So placed, heard that? That was TradeStation telling us the market's open. Placed 3rd of August 2022, 1 day, 55-minute short. Need to know there. I'm going to go back to the Aussie US. Place a note here. So placed 3rd of August 2022, 1 day, and this case was TradeStation. Appreciate that. 1 day, and it was a 60-minute, so 1 hour short, and that was all we needed to know there. Okay, so we've got 2 trades in so far, and just to show you, this is on the master version of the sheet that we use. So these 2 trades have now been added. August 3rd, Aussie US dollar, Aussie Canadian, again, different tracking material, tracking information, and we can see that there. Safety target was obviously filled in wrong on this one. So safety target was here. 6906. Okay, there we go. So we've got those now on the master version. And if I just show you very quickly then, if you go through to tradewithufos.com/Becky and just refresh it, and it should be, once it's loaded, and we just scroll down to these live session notes, once that fills in, then we can see on the Forex tab, those 2 are on there. Now, you can download this and add notes yourself and change things about. You might want to add different columns to track different things. You cannot edit. So if I do that, for example, you'll notice it will say any changes made to this published spreadsheet will not be saved to the original file. So you can edit it there and then download it, but you can't change the master file, which is obvious, hopefully a good thing. Okay, so let's come back to TradeStation and we'll have a look at the next one down, which is the, do you know what? What I'm going to do instead, because we've already got 2 Aussie trades, we'll come back to these Aussie trades, but I want to skip them for now and have a look at the Euro Canadian, and we'll go through the rest of the list, then we'll come back to those remaining 2 Aussie trades. So Euro Canadian, that's what we're going to look at now. This would be another short. And we've got an opportunity. Ooh. Let me see where the closest buyers are. Okay, we don't have any buyers. As you can see, I'm squishing this and we see no green UFOs on the left-hand side, meaning that there are no buyers already there waiting on a daily chart, which means our second target will be a trailing stop. Now, unfortunately, so that'll end up being 87, which is just below there. Okay, so we're going to have to group all of these together because they're all overlapping with each other. This one is far enough away, so we'll leave that one for now. We'll group these 3 together. Might be a reasonably large risk, but we've got the space because we don't have any buyers in the way, right? So we can have a slightly bigger risk. So just to show you, thick red dot, probability down. EMA price is 1.3106, which falls, of course, within these bunch of UFOs. And the entry price will be the lowest number here, so 1.3092. Stop loss, we will take that this number, so 1.31791, round up to 80, then add 2 pips for the spread, 5 pips for wiggle, makes it 1.3187. So that's going to be our area there. That's going to be our entry and our stop loss. Okay, now just to say, by the way, we're so far looking at daily climates on the left and therefore 55 or 60 minutes on the right-hand side. This would mean that you are a swing trader. So your trades will last normally a few days, maybe to a few weeks, could be a few hours in the cases of extreme volatility. If we were day trading, then we might use, for example, a hourly chart on the left-hand side and a 8-minute chart on the right-hand side. I personally do not trade Forex day trading. I've tried, it doesn't seem to work out very well for me. It's not that it's impossible. Of course, there are people that day trade Forex and it does very well. But when you're day trading something that has so many orders moving through it every day, like billions and billions and billions, I think trillions even, then you've got a situation where you've got lots of reasons why price might go up or down. The smaller the time frame, the tighter between our entry and stop, the less wiggle room we have to be a little bit wrong. You have to be more and more accurate, right? More and more specific on those smaller time frames. When you add the spread in as well, to me, that counteracts whatever probabilities you might get from Forex trading on a day trading basis. Like I said, there are people that do well at it. So not to say that they're not telling the truth or it's not working for them. Those are just my reasons why I won't necessarily look at smaller time frames. I also personally would prefer to also look at bigger time frames as well. I personally trade swing 2-position trading. If you are a trader that wants to do this on a shorter time frame, just change the time frame on the left to a smaller one, change the time frame on the right to a smaller one, and keep it like that. Okay, so let's just log this. So let's find out what our safety target would be. 1.30. I don't know why this is. Okay, 309. 2. I don't know what I'm clicking. I don't know why I can't just type over it, because I can in the stop loss bit. I can go 31. She says 1.3187. I can just type over it, but I can't seem to with the entry price, which is fine, not a problem. So we have here August 3rd, Euro Canadian. 1 day 55-minute short, entry of 1.3092, stop loss of 1.3187, our risk of 95 pips and a risk per lot of $7.40. Our safety target will be 1.2997. Our final target is going to be trailing, meaning we don't have a defined, delete that for there, we don't have a defined target where we're going to get out if it goes far in our favor. Why? Because we don't have anywhere that we can see that we have buyers in the way. So we're going to do a trailing stop, and I'll show you what that means. So let's place that first half, $50 risk as an example. Draw it on the chart. I draw it on the chart just so we can see it. You don't have to draw it on the chart. I personally think it's easier to do that. It's visually easier to see what's happening, but you don't have to. We're going to put here, and we're going to put our little note. So placed 3rd of August 2022. It is a 1 day and 55-minute. T2 is trailing, and it's short. Okay, so we've got that information. Now what we'll do for the second half is same entry, same stop loss, same risk. We just don't check take profit. So we've put the second half of the risk on, but we don't have a defined take profit. So what happens? That's gone in. What happens is that, let's say price comes, triggers our entry, we get into the trade. Price then moves slowly down, and maybe en route, a new red UFO forms. So we take our stop loss from where it is now and we put it behind the new red UFO. Price maybe hits our break-even place. Brilliant. Maybe a new red UFO is formed. Great. Move our stop loss, put it behind that new UFO. Okay, so that is our third trade of the day. Let's see how many more we can place. So we just looked at Euro Canadian. Let's look at pound yen. Again, bear in mind the pound has a lot of news coming out tomorrow morning that might cause volatility in the pound. So bear that in mind. You might choose to avoid trading this entirely. You might not. Oh, got a legacy trade on there. Let's delete that. Okay, pound yen also a short. Do have buyers that we can see. So our EMA is 163.06, which is here, currently too far away from the closest stack of UFOs. In the previous example, the EMA was 3 pips away from the closest UFO, with price 30 odd pips away, meaning that by the time price moved up, EMA would move up and they would meet within the UFO. In this case, the EMA is 163.06, so it's, say, here-ish. Price is 162.42. The UFO is 163.45, so it's a good nearly 40 pips away from the EMA, harder to guess or anticipate. So not lining up on this time frame. We'll look at a 60-minute and see if it lines up there. Same kind of thing, not lining up, no trade. Let's now look at the New Zealand Canadians. Let's take a look at this. Again, bear in mind, we might have placed now a couple of Canadian dollar trades. So again, if you don't want to double up on that risk, don't. Or place less risk per trade. So with this one, similar, understandable to the last one, because we've still got Canadian dollar in it. Don't have any green UFOs. So if we do place a trade, it will be same situation. We will be looking at trailing stop. Red dot, probability down. EMA is 0.8051. Oh, sorry, I'm looking at the wrong. 8051, which is here. Again, same thing for me, too far away from the UFO to be able to accurately anticipate it. So I'm not going to look at it. You might look at it yourselves later and see where it is. Now let's look at the pound Swiss and pound New Zealand. Those are the last two that we can look at. Pound Swiss. This could be a long opportunity, so at least something different. We've obviously got sellers now in the way. So before we've been looking at shorts and therefore being concerned about where the closest buyers are. If we're looking to go long, we want to be concerned about where the closest sellers are on the bigger time frame. So thick blue dot, probability therefore upwards. EMA at 1.1636, which is within this group of UFOs. So we will place this trade. Place this trade. Okay, so the entry price will be 1.16406, round up, add a couple of pips for the spread. Our stop loss will be 1.16132, round down to 13, take off 5 for wiggle room. Here we go. Okay, so that's our entry and stop there. Our final target will be where the first set of sellers are found, which is 1.1787. So that's our final target. Our safety target we'll figure out in a second. 1.608. So per 1 unit, 1,000, we are looking at, I'm just going to type it in over here, and again we can actually, we just do this and we can type it all in together, and you can see again another example of how we log trades. So August 3rd, it is the pound Swiss, 1 day, 55 minute. Was 55, wasn't it? Yep. Going long in this case. 1.1643 through to 1.1608. The risk in pips is 35 pips. The risk per lot would be 3.65. Safety target is 1.1678. And our final target was 1.1787. So we'll put that in a second to find out what that overall reward to risk would be for the second target. So let's place that half. Oh, no, cancel that. Why did I cancel that? Because I forgot to put that $50 example of risk there. There we go. Now we place it. We'll draw it in so we can see where it is. So it was 1.1678. Brilliant. Okay, second half of the trade, buying, same entry, same stop loss, same risk, and our profit target was 1.1787. Okay, so that's 4.11, $4.11 for every $1 risked. There we go. Great. There we go. That's that placed. Let's now write this in. So placed 3rd of August 2022, 1 day and 55 minutes long. Okay, back to TradeStation. So we looked at, which one was that? That was pound Swiss. So last one to look at is pound New Zealand. Again, especially with the pound, we've got some trades coming out, or some news coming out, sorry, that might likely to affect these trades. You might not want to place both of these pound trades. You might not want to place any of them. So bear that in mind and do what is right for you. Okay, thick blue dot, probability up. We are just at the sustainability point. So for those that know what that means, we're just at it, but that's fine. We'll still place it. Thick blue dot, probability up. We've got our EMA at 1.9372, which is outside of this UFO, quite far below it. So nothing on this time frame. And on a 60-minute, nothing on that time frame either. So nothing to be done on this market. So I said we would come back to the other Aussie trades. So let's have a look. So Aussie Swiss and Aussie New Zealand. So let's take a look. Aussie Swiss and Aussie Swiss now, and then we'll look at the Aussie New Zealand. This must have been a trade from a while back, so let's delete that. Okay, so we'll go back to 55 here. Okay, so thick red dot, probability down. Price is very close to the EMA, so we would be wanting a red UFO very close to current price. We have nothing, no trade, and we move on. Aussie New Zealand, last one to look at before we might drop to smaller timeframes for those that want to do that. So Aussie New Zealand, New Zealand. Okay. Okay, we have a trade. It's this UFO here. Let me just draw that in. Price is very, very close. In fact, within it. So we're actually going to go in at market, which is not common, but we will. 1.1090, which is roughly where price is now, just for me to draw it. 1.1105 plus 7. 12. Okay, let's quickly get this in whilst price is there. 1.1090. In fact, we'll go to market. We'll do stop loss here is 1.112. Risk, so it was $1.41, just to remember that. $2 risk. Same amount away. Oh, moving a lot. 22.9. Let's do 23, and that's about 1-to-1, isn't it? Okay, that's gone in that first half. Second half, we have UFO down here. Let's just quickly draw that in. 1.0886 would be. Okay, so at market, same stop loss, same risk, which will be $50. Profit target is 1.0886858. Okay, brilliant. We did that quickly because, of course, price is there right now. So we didn't get an exact number on our entry. We're going to say it's around about 1.1090, just because that's where probably averagely between those two. Of course, you'd be able to check exactly what your entry price was. But for this, the case of this, let's just put it at that average in the middle. So 1 day 55, it was short. Entry was 1.1090, roughly. Well, actually looks like we got in at on some of them, 1.10888. So that was the entry. The stop loss then is 1.1112. The risk, when we did that, was, I believe, 23, was it? 23 pips? We can quickly do the maths there just so I can make sure I get that right, because of course doing it at market now is not helpful. 23.2 pips. So the risk per, if I did 23.2, that's $1.45 risk per lot. Final target, safety target was, it looks like it deleted that first trade to put the second trade in. So we're going to go in a market now, and we're going to put the stop loss 1.12. 23. Trying. Brilliant. It was 1-to-1 at that point, so we'll put that in now. Brilliant. So that would have got in at, again, we're going to say that same price. Our safety target was 1.10665. Final target was, again, I think it's deleted one of the trades to put in the other one. But this would be what it would be. Reward to risk on that one. Let's just put this in, assuming it was a limit. So we'll put in, just to find out the numbers properly. So it was 1.108. I have no idea why TradingView is being difficult with me on this one today, but we persevere. 8. Stop loss 1 point that. Profit target was 1.1, or 1.0886. That's an 8.74 to 1. Assuming we got all the way there, and of course somewhere in between, actually more like 4 point something to 1 overall. Okay, so that is our 5th trade of the day. That's gone in. This one went in a market, so slightly different. But let's put in a 3rd August 2022. It was a 1 day, 55-minute short at market. Okay, brilliant. So we've got all that there. We just about have time to maybe look at some small time frames. We've got none on the 60-minute climate, so that's much smaller day trading. We'll look at a 40-minute climate. This will be longer term day trading, might take a few hours to close out this trade. We have one opportunity on the US Canadian and one opportunity on the Aussie New Zealand. So let's have a look. Dollar Canadian, we'll do it both on here for each. Dollar Canadian, 4 hours on the right, 21 minutes on the, 4 hours on the left, 21 minutes on the right. US dollar Canadian. See, so thick red dot, probability down. EMA price at 1.2850, which is there. I'd say based on where price is, I wouldn't be so confident. It's got to go up by 13 pips. Would the EMA move up by 3 pips? Depends how quickly price moves. Not willing, especially on smaller timeframes on Forex, not willing to take that chance. Again, you can track that and come back to it and have a look yourself. Let's look at Aussie New Zealand. What I'll do for the Aussie New Zealand, I'm going to look at FXCM, just so it's a different thing than the one we've already got on the bigger timeframes. Those of you that are going to be trading on these timeframes probably won't be trading on the bigger timeframes because the timeframes are dictating the style of trader you are. If you're a swing trader, you're a swing trader. Don't place day trades for the sake of it. If you're a day trader, you're a day trader. Don't place swing trades for the sake of it. So I'm giving examples so that different members of the audience can choose what works best for them, if anything. So again, you wouldn't be in a longer term Aussie New Zealand dollar trade whilst being in a shorter term Aussie New Zealand dollar trade unless you specifically have decided you are a mixed style of trader. So we have an opportunity with this trade, so we shall place it, and this will be the last trade we place today. So we have thick blue dot, probability upwards. We've got the EMA falling within this UFO. Quickly do the numbers, I won't explain how we got there. Other way around, other way around. That takes time, but you should know if you've watched the Forex course or been with us a few times what we're doing to add to these numbers to get to the specifics of where our entry and stop would be. 8.3. 6.6. 1.06 per. This is Aussie New Zealand 4 hour 21 minute long. Just obviously writing it in over here quick. That's 1.06. It is 17 pips worth of risk, $1.06 per lot. Our safety target, therefore, will be 1.11 on the dot. Final target is 1.1149. In that half of the trade again, $50 risk as an example, $1.06 worth of risk per lot. 3, 6, same risk. And final target of 9, which is overall 388 for risk ratio. Okay, so let's place that. Brilliant. And then we'll put a little note. Placed 3rd of August 2022, 4 hours 21 minutes long. Okay, brilliant. So let me just come back to here and refresh so we can see those new trades that we have on our live session notes. Here we go. So we placed 6 trades today. course, there are 4 Aussie trades. I wouldn't recommend doing all of them because you are doubling up. 2 Aussie New Zealand trades, but different time frames. So in theory, you shouldn't really be placing both anyway, because you probably aren't 2 styles of trader. You're probably 1. Could be though. And then we've got a Euro Canadian, a Pound Swiss. Again, we've got a couple of Canadians in there. So bear in mind, you might not want to double up on your risk. You might want to choose ones based on other criteria. If you just want to place one, might place all of them, might place none of them. You do you, basically. You want to do what makes most sense for you. Now, you can come and check this over time. I will update this. What happened with the trade? Did we cancel it before it entered? Did we break even? Did we close it out early and get a smaller loss or a smaller profit? Did we get a full loss or a full profit? Snapshots and explanations, so you can find out how these trades evolve over time. I'll be back within, I guess, another month or so. So if you have any questions, email me, which is becky@tradective.com. Can come to tradewithufos.com/Becky to track the trades, to check out our apps, courses, and coaching. We've got live trading schedules and different login areas, and a question and answer section at the bottom as well. Always here to help, always happy to help. Please do reach out if you need it, and I will see you guys very soon. Take care. Bye-bye.